I'm Lindsay Smith, and I'm joined now by Bill Orr. He's the product owner with the Western LPIP, which I'll tell you, Bill, that's probably one of the coolest names of programs I've heard in a long time.
Well, we're all about cool, but we're all also about risk management, and that's certainly what this program is all about.
Right. Okay. So now, Bill, we're getting down to the wire. So I'm going to apologize ahead of time for anyone who's looking to use this program for calves. That May 30th is the deadline. Let's get that out there right away. We're going to walk through what this program is, but the reason we're sort of getting it out there now is that we don't have a lot of time to hop into this program this year. But Bill, I'm somewhat familiar, but why don't you talk to me like I've the first time I've ever tried to sign up for this program. Why would I do it as a cow-calf producer or a calf producer? How do I manage my risk with this program?
Yeah, no, excellent questions, and I think that is the case. There's lots of uncertainty out there in the markets, as everybody knows. Your listeners will be well informed in regards to that. But the Western Livestock Price Insurance Program is it's a market-driven program, and really it allows livestock producers to purchase protection. It is an insurance product, but it protects them from that unpredictable downward price. And it's not only for calf, as you've mentioned, but feeder and fed and hog as well. Now, feeder and fed and hog are year-round. They're continuous participation. It is, as you say, down to the wire on the calf program. So we've got 7 days left. We purchase days are Tuesday, Wednesday, Thursdays from 2 till 5:30 p.m. Mountain Time. And that is that's kind of the gist of the timing part of it. Certainly, you want to get in touch with a branch office, or certainly give us a call center a call here in Lacombe, and we can get you set up with a subscription. And if you are so inclined, see the prices that might be of interest to you, that can also be done and handled either through our online system, or you can do what's called a paper purchase to actually get your coverage. So in just simple terms, what you do is you look at a premium table, and we'll go through that here in a little bit. Pick your coverage, select the coverage that you've got, and the timing out into the fall where you expect to be marketing your calves. There's a premium associated with that. You pay the premium, and then really that's all you need to do at this point. Come fall, if the market price is up above your coverage level, you participate in that higher market, and you don't get a payout. But the case is where if the markets do take a turn down and the market price is below your coverage price, that's where an indemnity is paid, and you get a check sent to you. So that's really the basics, Lindsay, of how the program works. It started actually in Alberta in 2009. We extended it out and expanded it out into the other product lines by 2012. And then in 2013, we added on the additional Western provinces. So this is a program that is available right across the West, and it is an important feature for the livestock industry. Certainly, price risk is a huge a huge risk in terms of managing your operation. And so this program was actually born out of the industry itself. If we go way back to 2003, where we had the BSC incident and the border closure, that's really when work started on how could we get a made in Alberta or a made in Canada price risk tool that would work for producers in this country. So
now So walk me through, can I choose, is it like in percentages, like 80, 90, 100? What does that look like?
Sure. So certainly if you're into a branch office, the staff are knowledgeable there. They're well-versed in the product. And that's probably one of the first things that they will will show you or go through and explain to you is the actual premium table itself. So if we, for example, look at if you're looking at that calf product for this year, really it's just a one-pager. Down the left-hand side, you've got your insured index in hundredweight. So, for example, yesterday you could have purchased $204 coverage. So that's 2 cents a pound or 204 per hundredweight, however you want to think about that. And so the premium related to that for a 20-week policy. So that policy would actually expire out in October 7th of this fall. The premium per hundredweight is $4.21. And so if you're dealing with a 6-weight calf, so the weights that you want to keep in mind is what your marketing weight is out in the fall. So for a 6-weight calf, that's about $24 to get that 204 coverage. What we have seen, Lindsay, though, is that a lot of producers are buying a little bit further down on the table, maybe down in that 190 range where that premium comes off quite a bit. 188 coverage, for example, is $1.52. So you're down around $9 a head for coverage there, and so it really depends on where your where your break-even costs are, what your risk appetite is, what your expectation for those fall numbers are. But it does give you that flexibility to pick off that table as to what kind of coverage you would actually like. And then the coverage out into the fall, you can actually go right out to early December here right now on a 28-week policy. So it's very flexible. Important to know, if you wanted to keep or retain your calves, you can still do that. If this program doesn't call for you to sell your animals, so that's an important point to keep in mind as well.
Okay, so you did mention, of course, that this has been an option for some time now, and that the development has been over quite some time. But tell me, what has the uptake sort of been? Has it been growth year over year? Is it still one of those things that you want a lot more producers to know about and use? Where are you sort of headed with it?
You bet. Yeah, I think we certainly had, I wouldn't call steady year-over-year growth, because I think what we've realized with this program is that it is very much dependent on what the market conditions actually are. What are those expectations for those prices in the fall? And that's what we've seen, where producers will look in the fall or look in the spring here, trying to get a measure for where things are going to end up. So they may or may not, choose to purchase in any particular year. But what we're seeing this year, and again, I think just because of some of the uncertainty around, we've seen really, really good uptake right from the start. So selling back in February 4th, you were able to pick up that 206, 208 coverage, and we saw a lot of uptake right at that point. Where we're sitting currently with Alberta is about 150,000 head covered, so 150,000 calves. If we look across the entire West, it's just under 300,000 calves that are insured right now. And typically the last 3 weeks of May are the busiest time. It seems like the deadline kind of pushes everybody to make that decision and look to get some sort of coverage. So certainly we'll see those numbers go up as we go through. Previous years we're off that high of 2017, but we're certainly well ahead of last year on the calf side. So that's really encouraging that people are looking at the tables and making that decision. And I think any time that as a producer, you're taking some of that unpredictability out of the market, right? I mean, we don't have a lot of say on the volatility of the market, but you can certainly at least set that floor price and sort of go ahead confidently, right? Yeah, and we definitely try and factor in some of those live market conditions as we go along. If anyone listening has maybe been following through on where the coverage has been, certainly it's come off here in the last week or so. But when I look at the coverage tables here, for example, for Alberta, the calf, we've had a lot of selection up at that 228 coverage, so that was that top purchase level. And then the lowest at $1.80, so more down into that break even or that disaster coverage that some producers are using that for. So we see a bulk of the expiries coming in that last week of October and that first week of November. That seems to be that area where we see a lot of that marketing that's going on. So. Very. That's the thing. It's flexible in that way. You can pick that coverage, and you can pick that premium associated with it, and feel that you've laid off some of that risk, because it's not like a contract where you're locked into that price. You can still participate in that upside. I mean, that's really one of the hallmarks of this program, is that it sets that floor price. And if that market happens to be above, you're going to get that. You're going to get that market come sale time.
Mm-hmm. Absolutely. All right, Bill. For anyone who is interested, is there a website that they could check out for more information? I will say we'll include that on RealAgriculture.com as well. But where could they go for more information?
Yeah, absolutely. There's lots of contact info, and then lots of just general information and knowledge on www.WLPIP.ca. And certainly you can visit any of the AFSC branch offices around Alberta. And the toll-free number to the call center, which is, again, a really great source to just pick up the phone, talk to the girls there at 1-877-899-2372. And they'll be able to get you set up if you've never walked in the or of AFSC. You can get set a subscription, get all that paperwork out of the way in less than a day, and be ready to do a purchase. So that's kind of the long and short of it as far as getting involved and getting set up to actually make a policy purchase, Lindsay.
All right. Well, Bill, thank you so much.